button. Talking about ETFs. So once again, it's on. Who am I? My name is Jamal. Some people call me Super, Sofa King, Super, Mr. Foyos. But I'm one of the collective here to teach you about what ETFs are and why they are important. So let's full screen this here. What ETFs are and why they are important. So let's first start out with the definition. So the boring definition of ETFs is they're exchange trade funds, aka ETFs. So that's what the ETF stands for, is exchange traded funds. And so basically this is a collection of stocks or companies or securities that can be bought and sold like shares, even though they're a collection of different stocks, but they can be bought and sold just like individual stocks. So what that mean? So I tried to put this in terms of sports. So your stocks, your securities, your companies, those are your players. And your ETF is basically your team. So ETF is composed of a whole roster of players or stocks that make up that team or ETF. And I go on to say that the ETF is basically acts like an all-star team. So it's like not just all of the stocks in certain cases. It's the best of the best. And so the companies that are in a team or on a team, usually they have a common theme. So they're kind of, most likely they might even be competing against each other or similar to each other. And throughout this, I'll most likely reference the indexes. And so the indexes kind of work like, if we were talking about basketball, the indexes would be the different divisions, or in football, the different leagues. How you got the AFC and the NFC, and then you got the different divisions in that, where you only have like the Redskins, the New York Giants, and Philadelphia, and they only play, in their certain division, and then you got the other teams, and yada, yada, yada. But example of an index would be NASDAQ, the S&P, Dow Jones. So those indexes basically have a bunch of players that play in them. So that's where you'll find like all of the stocks that they each are assigned to a different index. But that's it's just kind of just a term that just needs to be defined, just so that everything kind of makes sense in the sports type of theme. So you want to know that the indexes are just basically like the different divisions when you talk about sports that each one of the players is assigned in. So going back to ETFs, some popular ETFs here I have listed. SMH, and that's basically the theme of SMH is the semiconductors or chips. So all the companies in there on this team, or the players in this team, will be chips or semiconductor related. And then we have QQQ, that's also ETF, that's index. That's reflective of one of the indexes, I believe, NASDAQ. SPY is also an index. That's a reflective of S&P 500 or the 400. I'm not too sure, but it is a S&P. So that's a reflection of basically a larger set of a whole shit ton of players. So they're basically trying to copy the movements of a whole ton of players by selecting certain stocks to be in SPY and QQQ, because NASDAQ and the S&P 50 actually have thousands upon thousands upon thousands upon thousands of players or stocks or companies that are assigned and underneath them. But these ETFs can only hold a certain amount because they only have a certain amount of money. So they can only hold a certain amount, and that's why I go back to say that they pick the all-stars, because they want the best of the best that reflect the index in general. The last one here is XLE, and that's a sector. So XLE is a reflection of oil and natural gas sector. So again, XLE is a team, and they'll have the best players from the oil, natural, and gas type of companies. So in there, you'll find the best all-stars when it comes to oil and natural gas. So let's break it down. Like I was saying, SPYs, if it was a team, this is their logo here. Spiders, those are the people in charge of bringing a SPY. And so when we take a closer look at SPY's roster, this is the top 10 holdings, or the top 10 players, or basically the top 10 most valuable players that they have their money tied into. Basically over here, that's what it's saying, percent of assets. So this is how much of those individual players this team actually owns and delegates to the individual stocks. So each team has a certain amount of money, whether it's in the 100 millions or billions, and they put it into each one of these players. And these are the percentages of how much money they're putting in. So going back, you see SPY has Apple, Microsoft, Amazon, Facebook, Google, Berkshire Hathaway, Tesla, Nvidia, JPM. Those are the biggest players that they're giving the money to. So you get, all of those for the price of SPY. Here's another breakdown, QQQ. This is another team, ETF, and this is the players that they have. This is surprisingly kind of close to SPY. Apple, Microsoft, Amazon, Google, Facebook, Tesla, Google some more. Nvidia, PayPal, and Adobe. So like I was saying earlier, this is a copy of an index, I believe NASDAQ, if I'm not mistaken. So it's trying to do its best with its player selections to emulate the NASDAQ, which has thousands of stocks. So it's going to choose the best around, or the best of the best, to get in. This last one here is XLE. This is a team ETF that's focused on natural gas and energy. And these are the players over here, aka stocks, companies, securities. You got Exxon, Chevron, ConocoPhillips, EOG, Schlumberger J, Marathon Petroleum, Pioneer Natural Resources, Phillips 66, Kinder Morgan, Williams Companies. All of those are smashers and dashers. And then again, over here on the far right, you can see how much money is delegated to each player. They're heavy into Exxon and Chevron. Almost over 40% of all that money is going into those two tickers, players. Why is this shit important? Well, for me, and in general, I believe ETFs help you make sense of all of this market noise. For example, they can let you know which sectors are moving, because the ETFs track sectors. For example, the XLE, which tracks energy and oil that we just were talking about. SMH we just talked about, tracks semiconductors, and I believe this is XLP that tracks consumer staples also. Again, like I said, the ETFs can give you a good listing of which are the best stocks or players or securities to put money into, because the ETFs hold the stocks that the investors and the institutional big money loves. And then I put down there, example, SMH has QCOM and Nvidia and AMD, which are like the best of the best when it comes to the chips. Also, this last bit of rundown here is just kind of like some quick case examples that I made to kind of just demonstrate how this works in theory. And this first case here is I'm looking to get invested in Nvidia, a chip company, and Cost, a retailer. Also, I'm looking at Adobe, which is kind of like a tech company. So how can I get sexy with this whole notion? And then the answer here would be to join Team QQQ, because QQQ actually has all of those three stocks listed in its roster. So for the price of QQQ, you can get all three of those all-stars, which is very, very good, getting the best bang for your buck. You're also diversifying your portfolio by spreading, the loss from potentially one stock to several, you're basically kind of covering your bases to avoid a loss or substantial loss from an individual player. You're making all your players all-stars and just instead of just betting on one all-star. Another case example here, I'm looking at mobile companies because some 5G news just popped out. And I'm looking at all these mobile companies and everybody's running. And I like AT&T because of the 5G news, but I also see that Verizon is running and T-Mobile is also running too. So how can I get sexy with that notion? And so the answer for me would be looking at XLC, because with XLC, the team ETF of telecommunications, for the price of XLC, you get all three. You get Verizon, you get T-Mobile, and if you look to the right over there, you also get Netflix, you get Facebook, you get Comcast, you get Disney, and you get Activision. So it's like more bang for your buck, portfolio diversification, because you're avoiding a loss from an individual MVP and you're spreading your cost out to all of your all-stars and MVPs. So instead of taking a loss from an individual, you have 5 or 4 all-stars now. So when that one person isn't putting out, you have 5 other people who are, instead of just betting all on one thing. So let's go live on stage just to see some resources that I used. Okay, I meant to put that one up when getting this information. So the first one there is ETF.com. So let's just quickly go to that website, and I can just give you a rundown of how I actually used it to find some information on ETFs. Today, I was looking at AA. So say tomorrow I wanted to be looking at AA, as well as just try to find something related to AA. Say I didn't know what AA was or what industry, or if I was just looking in general to find other stocks like it, that's when the ETF is helpful. So you can go here and type AA, and then it gives you the first here, 142 ETFs with AA exposure. So this is basically 142 teams that have AA on it. Then here you can see which ones have the biggest payout to it, which ones are investing the most money in it, and you see that XME, the ETF XME, is the number one. So clicking on that, we can get some more information. Scrolling down, it'll tell you all types of stuff. But generally what I'm looking for, the keyword is holdings. Right here it tells you specifically what they are related, what the theme is. Their theme is metals and mining. And then further down, you can see their top 10 holdings, which includes these players here. And then again, the percentage is how much of their money they're allocating or giving to that individual player stock. So inside of here, we got Cleveland Cliffs, that's CLF. You got Peabody, that's BTU. You got Steel Dynamics, SLD, I believe. You got Nucor, NUE, and all of these are mining and mining and materials. Or metals, I'm sorry. I knew it was one M word. I was going to get it eventually. Metals. So Cleveland Cliffs is steel. Peabody is they're mining. They do a lot of mining. Steel Dynamics is, drum roll please, steel. Nucor is also steel. United States, that's X, that's steel. So they're heavily invested in steel. They also have Newmont in here, NEE, AA, there's AA. They have our gold and commercial metals. So those are just the top 10. But they also have a lot more. If you go here and view all, you can see all of the stocks that they hold. So if we expand, you can see they also hold Piedmont Lithiums. So they got their lithium in there. Also saw FCX right there. So they got their copper, they got a uranium. And so it's a lot of nice information that you can get just from using this one website, ETF.com. And you can use that like I just did to find ETFs that hold an all-star, or you could work from the backwards. You can work backwards and input an ETF to see which players are on the roster, excuse me. And then just to demonstrate one more time, using Yahoo, I believe that was the other one that was listed. If I can get back to the PowerPoint, Yahoo Finance, and then just Google in general. Yahoo Finance also has the same features and whatnot available. Just using that one. Let's go to Yahoo Finance. I thought I had this website already open somewhere, but I can't find the window. So Yahoo Finance delivers basically the same information, just in a different visual. So say again, we were looking at AA. Actually, I don't believe that Yahoo gives you like which companies or which teams hold the player. I'm sure it doesn't. But what Yahoo does give you is the holdings of the teams that you're looking for, or the ETFs that you're looking for. So I just typed in XME, the one we were just looking at, and then the keyword here is holdings. So holdings is the roster, or the lineup, or the group of the team's roster of players. You click on that, you scroll down, and it gives you the top 10, or the top. And we can read them off again, but they're right there. And so that's generally how I use that in relation to ETFs. Is there more scrolling that I can do? I don't. They also give you some recommendations over here on the right, but I don't generally use those. But generally, Yahoo Finance is good for just finding what the team's roster is, what the ETF is holding, aka. And then the ETF.com is good for hunting and trying to find a team that a player is on, or a team that holds a player. So you'll find different teams or different ETFs have the same player, and then you can pick and choose which best ETF is for you, or which is the best ETF for you to play or watch. So that runs us down to basically the last slide here. Is there any questions, comments, or recommendations? Other than that, that's it for me. Hope I was informative enough, but ETFs are pretty understandable. They're just teams. If you look at the stocks as players, ETFs are teams of stocks that you can buy like an individual stock, but it just has more than one.
I do have one question. Do you personally tend to swing or buy ETFs long term?
Well, that depends. That's all situational. What the market is giving you. With ETFs, they are good to swing. I mean, but that's just, anything in general. With the ETF, because of the diversification and the kind of risk management that it offers, they will be better suited to swing long term, because like I said, the risk is kind of delegated to your players instead of an individual stock. So the benefits of playing the ETF long term is more so based on what it is. because of how it's structured, it would be good to play long term because your risk is kind of mitigated because of how it's structured. You're not betting on one stock, you're betting on a bunch of all stars. So one day one stock might be down, but the other 4 are up. Or one day 3 stocks might be down, but the other 10 are up. So in the long term, you're still making money, whereas on the short term, you could be losing money from an individual stock or individual play. But I think that question is situational, because, for instance, I mean, I've played XLRE, which is a real estate ETF, for a day, just swinging it for a day, and got good returns. And then, I've played ETFs like SMH and TAN and ARKK back when that was hot, and got, very, very good returns over 3 months. But we were in a green market at the time. I played those same stocks and got clapped for $30,000. So it's all situational. I mean, I'm sorry, not stocks, those same ETFs, and got clapped because things change, seasons change, and sectors rotate. That's why these building blocks here, knowing what an ETF is, knowing what the sectors are important when it comes to trading. It's like trying to be LeBron James, but not knowing how to dribble. But I hope I did answer a bit of your question.
Oh, you did. It's good to know. Thank you.
No problem. Well, I'm not going to wrap you up any further. I'm going to go ahead and break. I know you just got off of work, so you need a break too. So thank you for your attending. And like I said, I'm always here. So if you ever have any questions about this or anything else, you could always hit me up.
All right.